LNCC. Aims to strengthen transparency, faster innovation, deepen investor protection and participation, and expand scope of instruments available to mobilize capital, particularly for housing and infrastructural development in Nigeria. Key provisions of the Investment and Securities Act 2025 that is relevant to housing finance in Nigeria today will include: 1. Investment in real estate and housing projects. Now, under this collective investment scheme, under Section 168, subsection 2, are now expressly permitted to invest in real estate projects. Also, private equity and venture capital funds under CIS can also channel capital into housing development initiatives. 2. Investment in infrastructure and private debt. CIS may invest in infrastructure projects and private debt, enabling long-term capital formation for large-scale housing and related development, subnational government and issuance. Section 269 introduced greater flexibility for state and local governments to raise capital in the market and creating opportunities for housing to be financed as part of broader infrastructure program, Sharia compliant channels for capital raising. Section 168 allows CIS investment in Sukuk, expanding Islamic finance opportunities for housing and real estate financing. Our national experience with Sukuk for roads and schools demonstrates the viability of this model for housing. The Investment and Security Act also breaks new ground by recognizing virtual and digital assets as securities under Section 357. These forward-looking provisions enables innovation such as real estate tokenization, which is very key, which can unlock liquidity, facilitate fractional ownership, and by fractional ownership, what we mean is that those who have houses can tokenize these houses and sell those tokens in fraction. And by so doing, you will be able to raise money to further develop in other real estate programs, or even for expansion of whatever program you have. So tokenization is key. And you know, in our market today, we've also created the custodianship. Yes, somebody might want to ask, when you tokenize, what happens to the real estate itself? Yes, valuation comes in, and valuation becomes more frequent, and those assets title are held by the custodian. So it creates safety on the other hand. And broaden investor access to housing finance. The SEC has also registered 4 real estate and real-world asset tokenization firms under its regulatory incubation program, evidence of our commitment to innovation anchored on investor protection. Additionally, securities-based crowdfunding remains a viable channel for raising capital for real estate development, and our regulatory framework is in place to support reasonable adoption. We also acknowledge the significance of the initiatives such as the Murphy Real Estate Investment Fund, the MREIT, a public-private initiative under the administration of the President Bola Ahmed Tinubu with strategic leadership from the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edu. This initiative reflects the federal government's commitment to strengthen housing delivery through innovative financing. The SEC remains dedicated to fostering and enabling transparent and innovation-friendly capital market environment that supports sustainable funding for housing, other critical sectors. Our collaboration with IMAN and other partners continue to be vital part of this effort, and we value the sustained engagement that drives progress across the mortgage financing landscape. The discussion at this conference offers a unique opportunity to review achievement, identify emerging challenges, and strengthen alignment among stakeholders. The recommendation that emerged from this session will undoubtedly inform policy makers, support institutional reform, and shape Nigeria's broader housing development strategy. I encourage all delegates to participate effectively, exchange ideas, challenge assumptions where necessary. Your contribution today can significantly enhance the resilience, inclusiveness, and effectiveness of our mortgage financing ecosystem. On behalf of the Securities and Exchange Commission, I wish IMBAN and all participants a productive, insightful, and impactful 22nd Annual Conference. May the deliberation here pave way for stronger housing delivery system and expand access for millions of Nigerians. Thank you by Dr. Momatini and Director General. Thank you very much.
Ladies and gentlemen, you can make it louder for him. Thank you very much for those words of inspiration. We just had the representative of the DG of the Securities and Exchange Commission, Mr. John Edelbridge. Thank you once again for coming. Your Excellencies, ladies and gentlemen, distinguished guests and partners in progress. It is my honor and privilege to introduce our keynote speaker, a leading light in the field of housing and urban development in Nigeria. Distinguished guest, the man I'm about to call serves with distinction in the Department of Estate Management at the University of Lagos, UNILAG. Over the years, he has built a formidable reputation as a scholar, policy advocate, and thought leader on housing finance, urban regeneration, and sustainable development. As a director of the Center for Housing and Sustainable Development at UNILAG, he has consistently championed reforms aimed at bridging Nigeria's housing deficit, calling for sound mortgage systems, housing policies that protect the vulnerable, and large-scale strategies to boost affordable home ownership. His scholarship and public service draw from decades of academic research and engagement with real estate professionals, government agencies, and development institutions. He argues with clarity and passion that housing is not just a basic human need, but a foundation for social stability, economic growth, and sustainable national development. Today, as we gather under the theme, funding housing for a growing population, there is perhaps no one better suited than Professor Timothy Olugbenga Nubi to help us reimagine and reinvigorate the path forward. His insights will challenge us to think structural and to think long-term, and also to think inclusively. Ladies and gentlemen, can we all stand on our feet and give him a sound, loud ovation as he comes forward for his keynote address. Professor Timothy Olugbenga Nubi.
Thank you so much. You know, sit there, please. Thank you so much. The organizer, thank you for inviting me. I don't take it for granted. Elijah told God, say, I'm the only one. And God said, you are a liar. 70,000 people. So, there are more than 70,000 people that could be given the opportunity to stand here and they will still do better. So, for inviting me, I want to say a big thank you to you. What you read about me, I would like to have a copy. It's like they're talking about somebody else. Thank you so much. I'm a liberal. I have passion for housing. I have passion for housing because I was born into poverty. I came from a village and I came from a village. You know, when your grandparents are tenants in the village, you can look at the strata you belong. For you to have a mother, a grandmother. And I always see this woman singing that is tenants suffer. And work hard so that you could have your own. So, and I saw this poor woman in the village built 4-bedroom mud house. All alive, building this house. No, she spent her life because she died 2 years after she built the house. But before she died, she told my mom, she said, Olu, I borrowed money to buy Ayoshi. She said, no one should come to you and say I was owing you anyone. That was my first initiation at a tender age. And I really knew that tenants suffered. So I grew up, that's my grandparents. I grew up to St. Andrew's College, Oyo, where she had grade 3. Through hard work, this man was able to build about 3 houses. A 16-bedroom house in a town, about 10 flats in Djibouti. But he retired as primary school headmaster. Then we had, if anyone is from Djibouti, Nubi coaching class. People came for. Then there was a time I was in the Muslim Polytechnic. A man who also had NCE. After 1 year, we met in there, spent about 2 years in that house. All of us were students of the Polytechnic. And after 1 year together, or 2 years together, the man told us he was leaving. And I asked him, I said, why are you leaving? He was like a big uncle to us. When we caused trouble, he was the one who was helping us. And this man told me, I said, have we tired you with our problems so you are running away from us? He said, no. He said, I built my house. He was moving just few streets away. NCE, 4 or 5 years after leaving school, had his own house. And I wake up every day, I see PhD holders in my department sleeping in the office. I see professors after retiring at the age of 70, nowhere to move to. And I kept on asking, what went wrong? That my father, grade 3 teacher, who owned houses. NC 582 will move to his house. What went wrong? And every year we gather and discuss. And it reminds me of Jeremiah that asks, at a time like this, that is there no more balm in Gilead? Are the souls of my people not healed? And we have to really be real to ourselves. Thank God. Mr. Patricia is seated here. More than about 23 years ago, he helped in the administration of my questionnaire for my PhD. Evaluation of the effectiveness of mortgage bank in Nigeria. That was my PhD. And there were solutions. 7-year project. There are solutions. The mortgage industry in Nigeria was dissected. On the course of the program, I have to travel 2002 to US to attend a course, Welcome to Fannie Mae. And I found out Fannie Mae alone in 2002 originated 5 million mortgages. And when we hear the number of mortgages that we and the man probably took my phone and said about 1,000. About 1,000, okay. If we have to be sincere with ourselves, how many mortgages do we have in Nigeria today? That's the question we have to. I did my sabbatical in England, and I was struggling. Should I return home or stay in UK? Should I return home and stay in UK? The attraction is that I will soon become a professor. I don't want to go and start all over again. Then I was questioning myself, do you want to be a professor of Agric where 80% of the people were carrying kwashiorkor belly, or professor of building in a nation where most of the people, or 70% of the people, were living in slum? So those are the realities of our time. And it's not me that will find the solution to it alone. All of us that are seated. If we can come with one simple solution that all of us will drive, then we'll help the nation. Let me start by showing a 5-minute video, to put our discussion in context. Please, the video, please.
Lagos, a city under attack, not from the outside, but from its own state government. Lagos, a city under attack, not from the outside, but from its own state government.
I'm here because they demolished our house in the midnight. They come in the midnight, 12 a.m. They were just waking us. We should pack our load and vacate our house, that they want to demolish it without notice. Without notice, 2 houses, and we have CFO. We have a genuine CFO.
I have invested with my 30 years in ministry, not seen again, not seen.
That is fast in your arm and your life is overdelay in the eyes of human being. Almighty Allah, we say we should beg you, today Friday, there's a particular hour between the first khutbah and the second khutbah. If you beg me something, I will give it to you. Almighty Allah, we are begging you. Help us more than our expectation. Almighty Allah, give us more than our expectation that is good and benefit us. Here and here after about this month. Almighty Allah, we beg you. By yourself, bring out Muslim that will help. Good one, because Usman, he came out to help Prophet. Hamza came out to help Prophet. Umar came out to help Prophet. And he came out to help Prophet. Almighty Allah, you give them wealth, you give them power. Almighty Allah.
Final Fantasy going down, going down, going down. Final Fantasy going down.
We take you now to the scene of the devastating demolition in Lube, Abuja, where we have obtained exclusive footage of the aftermath. We had a chance to interview an eyewitness who was in close proximity to the event and was able to provide a first-hand insight.
So the little clue that I know about this demolition here is we have some issues that the government said this is illegal land people bought from another people without government knowledge. So before they know, people are starting building their houses here. Then the minister identified that this is an illegal area, it belongs to government, and give people that anybody has he has a house in here, so if he likes to come and lose his property before they come demolish. If they give that line, anybody didn't come, they will demolish it.
It's heartbreaking to see this. A once thriving community, now reduced to rubble. This recent demolition in Lube, near the airport in Abuja, has left many families without homes, without places to work, and with dreams shattered. As we look at the remnants of what was, we are reminded of the importance of making informed choices when buying properties. Abuja's real estate market is growing fast, but with growth also comes risk. And while we all dream of owning property, it is crucial to ensure that those dreams are built on secure foundations. Our thoughts goes out to those affected by this demolition. We know it is more than just a financial loss. It is a loss of safety, a loss of community, and a loss of future plans. We urge everyone looking to buy property to carry out due diligence when you invest in a home, an office, or even land. It's essential to verify all legal documents, check for authentic land titles, and ensure that there are no hindrances or risks tied to the property.
The state government is demolishing some residential and commercial buildings in various areas in Lagos. The government alleged that these buildings are illegal structures, poorly constructed, lacking planning permission, and obstructing canals and public access.
Most of those buildings that were pulled down are dilapidated. They are not fit for habitation. And we are now in the state that we are talking about all properties in Lagos State must have certificate of fitness for habitation. And we've been telling them that they should go ahead and get planning permits. And most of them turn deaf ear to the government. The life of people living in that environment is more important. of mortgage in America in the 21st century changed the entire world. What they taught us in real estate school, indivisible, but mortgage liquidifies, it's not liquid. One of the instincts of human being is survival. From bringing their cattle to the south. No power. It's survival. No, we can't stop there because the grasses were disappearing because of climate change. The grasses were disappearing. These are the truths that we must come to terms with. You know, when you understand the reality of our time, they will not be using Oyibo solution. When you understand where we are, there is now left for us that, look, we have applied this Oyibo solution for so long, and we have nothing to show. How do we do our customized? The goodwill message made it very clear to us that we cannot have one mold fits all solution. There are 70% of Nigerians will never and ever qualify for mortgage. No matter the rate. No matter the rate. And that's what we have to really address. The keynote address speaker gave that the teeming population of this country cannot afford whatever mortgage we offer now, then we now default. In 2004, in this Fannie Mae program that I attended in Atlanta, they gave the graphics. They said, look, the white people in America, 80% of them, thank you so much. Okay, I have to go to them. So 80%, this is the truth. This is the truth. It's a family meeting now. It's not keynote speaker. This is the truth. 80%, the data was presented 2004 or 2003. They were looking at the future of mortgage in America. Fannie Mae organized it. All the mortgage bankers were there. And they were looking at it. They told them, they said, look, 80% of the whites, they were already homeowners. At that meeting, they said 60% of the Latinos, they were already homeowners. But only 15% of the blacks were homeowners. And they looked at them that time and they said, for you to remain in business, you have to create assets for the black. Because the white, the 20% of them that were not homeowners is by choice. They chose to remain renters. So they said the future of mortgage in America, as far back as 2003, lies in the black. But these blacks, when you look at them, because one time or the other before, because they've gone to prison, they don't have a stable job, many of them insurance, mortgage guarantee company that give these black people, we know they are not qualified. But if you still want to keep on oiling this machine called mortgage that is driving the whole world, you must give them loan. You must give them. I said, the Fannie Mae now guaranteed it that if they were not able to pay, then we'll pay back. We'll guarantee their loan. That's why subprime lending. That's how subprime lending came up. So, American mortgage companies, they started giving loans to people that they knew had lack capacity to pay back. And when in your portfolio, when you have more than 70% of your people that took your facilities lacking capacity to pay back, that was what led to the bust. And the bust shook the whole world, threw the whole world into recession. But it started, that time I was telling them that is a penalty that the world had to pay for the way they treated black. But they knew that if they want to really continue all this underwriting process, all this underwriting capacity, this to pay back, this would lag it. And if you don't extend loan to them, there is no way we can continue in this mortgage business. So we have to open door for them. That's why Fannie Mae came. I'm talking about a nation that analyzed their situation and were able to come up with solutions. And that's why we have to do, that's what we have to do at this stage that we are in. That's what we have to do. We have to grow our capacity. Because this is a problem of urbanization. Funding pollution in the environment. We see a problem. The whole world, 20,000 died maybe. We have them. Before it was far away. But as I'm talking to you, more than 5 million Nigerian youth in the northeast, they are in refugee camp in this condition. They are in this condition. This is the reality of our time. Homelessness is all over the world. Major streets in New York were filled with homelessness. It's not a Nigerian problem alone. Africa's most populous nation, one of the fastest growing, that's Nigeria. We were told that in 25 years' time, we will be a nation of 450 million. We are 250 million. It's like this. And in 25 years' time, someone is telling us that 200 million will add to this our problem. So we have, that's the big elephant in the room that we need to deal with. That's the big elephant. And the age, the median age is roughly 18 years. The whole world, Nigeria in particular and Africa, the world in the next 25 years, the population of the world will be supported by, because an average population in Nigeria today, we have about 40 million youth, young people, 40 to 60 million young people. So these are people that, and the future is scary. All credible estimates project that Nigeria will have a population of 40 million by 2050. This is an extra 200 million in 25 years' time. This could mean a requirement for significant sustained investment in urban infrastructure. Why are we in this position? Policy issues, underinvestment, weak institutions, political will, inconsistent loan. That's the wealth of the world. Only 29 in this oil and gas, MTN, communication, AI, only 29%. The global last 10 years, you will not see real estate experts represented. All they keep on talking is solid mineral, communication, AI. 71% is on record, is statistics, is real estate. That's the driver of any economy. And this is they are least understood. If you know the importance of real estate, you will not allow people to build, move into it, and bring bulldozers the following day. There's a video in this estate that looks beautiful that they built by the canal that they were demolishing. It was shown. There was a video that showed that planning office was in front of that estate, at the gate of that estate. How many of you saw that video? Planning office was in front. So nobody could claim that they didn't know when those houses were coming up. And each house in that estate was about 300 million. Each time these houses were demolished, national assets were going to drain. A man retired 40 years after he had lived in a house in Ibadan. The man retired to that house, went out one day and came back. He saw his house pulled down. Where will he start his life again? All these houses demolished in Abuja, many people died immediately. They came back from work, they saw the house, they just died. Many people, they were carrying pressure, high blood pressure. They have health challenges. A man who lived in the house for 40 years and the family that sold to him another family took them to court, and it took almost 50 years to determine. And they determined that he bought 40 years ago from a wrong family. That happened at Okoba. My friend lived in Okoba for almost 10 years, for almost 20 to 15 years. One day he saw a notice that we have won court judgment. We have the land. And he wrote there in the letter, he said, we are peace-loving people. We have gotten judgment that this land belongs to us. Please carry your house. We don't want wahala. We love peace. Just carry your house. You see, come and tell me the banker that will accept your house as collateral when they know that even the one that you have CFO when a single person can revoke the CFO, has so much power. Yes, you have CFO, but the Constitution gave him the power to wake up one day and say, I revoke. I know many developers that pay for CFO. They pay about 5, in Oguse there, all this Babala Toro Road will have become beautiful city today. They revoke the CFO overnight. Many of them have obtained CFO. 3 months after they paid millions, government revoked because somebody has the power. Constitution gives somebody power. And these are issues we have to address for mortgage to work. These are issues we have to address for mortgage to work. We don't know that real estate helps in job creation, infrastructure development, and all the rest. But this is the state of most parts of Africa today. And where the picture you are seeing, they were not hidden. They are our neighbors at the University of Lagos. If you look very well, you see this high-rise building. That's the University of Lagos. Yes. Only the designer is still an unattainable goal for many African households. Lack of available housing finance, high cost of urban land, and all the rest. They are the problem. The problem across the real estate value chain. Real estate value chain starts from land. The land title. Now you heard that lady said, we have CFO, genuine CFO, because when you begin to define genuine, when you begin to define, classify CFO into fake and genuine, and we all know that there are so many fake CFO, even in Abuja, clone CFO. So how can real estate work? How can mortgage work? And so you have advanced mortgage to someone, and somebody now proved after 3 months the person have collected your money that he had clone CFO. I have the genuine CFO. It's our nation that begin to hear, you must be born again, you must be genuinely born again. So, we have problem with land. This is real estate value chain. We have problem with land, we have problem with title, we have problem with infrastructure, we have problem with construction itself. Today we don't have even artisans to build the houses. Professor Mamba Kudje told us that if the World Bank said, Nigeria, what's your problem? Why are you not housing your people? And he says money. And he said, how much do you need? $1 trillion, sir. And World Bank just give us. He said, we don't have the capacity to spend it. We don't have capacity to buy building material. The building material is not available. It's on record that 80% of the building materials we use in this country, they are imported. Look at this room. Look at this room. How can you see anything in this room manufactured in Nigeria? And people are asking, where is the ceramic factory that we used to have at Abeokuta? The glass in Ondo, where are they? They've all disappeared. So, we have problems that we need to resolve. We have those of them, you give a mortgage to someone, to repay back for 30 years. First Bank was built, under 15 years, First Bank ran down because of poor maintenance. Once the value of the property, this is a nation where value of property drops rather than appreciating. Then how do you recoup the mortgage as you advance to them? We have the problem of social and economic infrastructure. So many problems across. But the underlying one, the land security, is something association like this, we have to really work together and make sure, because that's foundational. I've been 50. I promoted an estate of about 280 plots. 280 plots. Today we have less than 45 plots. And when I was reporting, when I said I should report, AIG said they acquired land around Badore in Lekki area. 50 acres of land. When they started stealing it, he said he built police post. He said they stole it to the fence of the police post. When you report to a police station, and the AIG said they stole my land. Then what do you do? A friend had a land at Agara. People started encroaching. So he laid foundation, 14 foundations, different parts of the land. He was going there with soldiers. By the time he laid the foundation so that they will know that someone owns this land. By the time he returned there, he saw 14 coffins on those foundations. He stopped going with soldiers, he started going to MFM, Mountain of Fire, prayer warning, and anointing oil. Once you can solve the problem of land assembly and land title, once there is no land security, there can be no mortgage. Because on land, you build the house. And without this stock, there can't be mortgage. Whatever we give out to people, that doesn't allow them to move to the property the following day or the following week, it's not mortgage. And that's why in the wisdom of Professor Mabogunje, when you look at the number of mortgages that were created in this country, and he diagnosed that the problem of mortgage is that because mortgage banks sprung up 296 all over, almost all boys' quarters in Victoria Island were mortgage banks. Oasis, Frontinate, but no mortgage to create, so they converted each other. They started selling cement. My brother was operation manager in one of them. He said the end came one day. He said, "How much do you have?" He said, "We have about 100 million." 100 million was quite a good money there. He said, "I'm thinking of fishing." He said, "Fishing." No mortgage because no housing stock. That was what made for someone with to say that FMBN give money to estate developers so that they could create housing stock. That was another problem. So, how do we resolve the problem of creation of housing stock? Since the housing stocks are the underlying asset upon which you create mortgage, until we solve that problem and begin to produce housing en masse in this country, whereby we see houses as a commodity, how do we help this nation to improve the supply side that they will be producing en masse? How many minutes? 5 minutes, no problem. I will jump all this one. Since I've laid the foundation of the discussion of the plan, increase in urbanization, these are all things that we know. Housing deficit, we know. Housing deficit, we know. Nigeria's housing market, we know all these things. We know them. Private developers, there are challenges. We know all these things. Cooperative, employer base, key challenges, land acquisition, we've spoken about it. Building materials and construction costs, we know. We know. We know. Someone approached me a few months ago. He retired, he left, he was a registrar. This is somebody who has been a professor for 25 years. So he told me, he said, I wanted to buy, he doesn't want to leave because he worships at the church. He said, after retirement in about 3 years' time, I still want to leave because I want to come into this church. I just need a 2-bedroom flat around here. I said, how much do you have? He said, 100 million. I said, you get. I was lying. The least we got was 130 million. 2-bedroom flat. 2-bedroom flat. When they started this New Hope project, those who are building it in Lagos, the first price they put on it was 20 million. So we said, university people, I encourage them, let's form cooperative, let's get into this project. 2 months after I became 30 million. 2 months after I became 40 million. Today is 55 million. No professor in the University of Lagos can afford 55 million. No. My salary is 520,000. Only. So, these are the reality of our time. These are the reality of our time. So, construction problem, regulatory agency, people, so many lack of long-term expensive mortgage. When we look at this, you see mortgage shows in Denmark 85%, in Germany 54%, Hong Kong 30% of the GDP. In Nigeria, it's less than 5%. And then when you look at it across Africa, we're not doing well at all. Nigerian mortgage at 15% to 20% for commercial banks. We see the data here. We're not doing well. Without cheap and steady development loan, the developers will continue to build fewer units. They target high market end. A young man was sitting with me yesterday. He is into development. I said, this is one of the lecturers that came to meet me early in the year that, sir, help us, we want to buy a house. And together with my husband. I said, how much do you have? He said, 15 million. I said, well, you will go far. So the young man sat with me yesterday. The developer, one of the developers that I approached when I was working for 120 million house, he sat with me yesterday. The lecturer was with me. And I said, why are these houses expensive? He said, sir. He said, we buy a plot, 640 square meters at 250 million. Just the plot. As a joke. Area like Bagada. He said, so we build for high end. He said, the list in the market now of a semi-detached terrace house, he said it's 250 million. And we are keep on meeting and discussing this. I have 5 minutes more. Let me borrow 3 minutes. Let me borrow 3 minutes. I want to conclude with this. In line with the keynote speaker, the goodwill that we have most part of Nigeria that can afford mortgage. That's the reality of our time. How do we penetrate into this market? How do we did a research for FMBA assessing the informal sector. How can we help? And I kept on telling everywhere, I kept on saying it everywhere that when we say that we have 20 million housing deficit, when we say we have 20 million housing deficit, and I said that 5 people, forms are now sold, I would say that 125 million Nigerians are living on the street. No, that's not the truth. But what United Habitat is telling us is that those houses at K2, those houses at Moshi, they were not counted as proper houses because they don't have the facilities. And the low hanging for this country is how do we break this law? This World Bank record that 50%, more than half of all urban dwellers in South Africa live in slum. It's a statistic for World Bank. If we cannot build new, rehabilitate. Today, this is slum in Africa. 60% in Nigeria. Nigeria urban space from this size is slum. Now, these are slums across Africa. These are slums in Lagos. 70% of Lagos is slum. Now, which way to go? Approximately 4 hectares of slum behind the Federal Ministry of Housing, Secretariat at Babushi. These slums are not hidden. It's not that we don't see them. These are slums. These are consequences of, because slum, Reynolds 2002 said that the city reflects the housing finance that is available. When you get to any city, when you see a city and say this city is beautiful, there's a structured housing finance system. But where there is no structured housing finance system, people build incrementally and they develop slowly. So we begin to look at what should our objective be. Commission 25 years housing infrastructure need assessment, produce financial gap model, stress test for cost inflation and all the rest. sustained financing framework, I will leave this building block for delivering the objective. Land management framework, capital market, strong institutions, clear housing policy alignment, enforce property rights, digitize land registry, faster title, attract pension fund, let pension fund be made available, smart subsidy. We can't say we know what IMF said, close your economy, open your economy, open your economy. We can't afford to say that we are not subsidizing. Government has no business in housing. Government has business in housing. Conventional mortgage, affordable mortgage products with subsidy, rental housing. These are solutions that we are putting forward. Pardon me for the time I spent. My lecture hours in university is 3 hours. What we are saying that all over the world, we have done it. These are pictures. Slums have been cleared all over the world. We can do it. You know the good thing? This Docklands in London was slum. If you look at this picture, you will think you are in Makoko. But this was Docklands in 1986. But today, Docklands is one of the best areas in UK, in London. But this Docklands 1986. So they clean it, so we can clean our slums. We can clean our slums. This Docklands today. This Docklands today, with the London City Airport. They have done it before. We can do it. We can replicate it. One of the secrets of success in the world is that if you can invent, copy. These are slums in other climes. These are slums in other climes. Is it that we have not attempted slum in Nigeria, slum regeneration in Nigeria? No, we have. No, that's not the okay. South Africa. In Nigeria, this Oluwole. Because most of the time, it looks like we have failed totally. No, we have not failed. We are not a failed nation. This Oluwole, when you hear Oluwole about 10, 15 years ago, 20 years ago, what comes to your mind? Huh? Forgery. That was because it was a chronic slum. An architect, Lewis, took it up. 175 families in Oluwole. This was Oluwole. An island of slum in the midst of that commercial corridor. 175 families. Lewis built an estate for them, 175 in Shasha, and relocated them there. And rebuilt this place up for 30 years. 12-story building. The owners have 4 floors. They still gave them cubicle of shops that they were making income from. I visited them at Shasha. One of their leaders told me, he said, "Sir, I never knew that I could live in a place where our children would be riding bicycles." Well, no, government did not come to bomb the place overnight and chase them away. Strategic planning. People's involvement. We have done it at Oluwole. We can replicate it. We can replicate it. You know the beautiful thing? This Oluwole, this is the building where they started it. This is where they started it. People are happy. We also did it at Ijola Badia, University of Lagos. I was in the team led by Professor Olumide Olusoya. 1,008 units. We added 2 units to make it different from 1,004. We had to build this thing. We did 2 units before change of government. Change of government frustrated it. But we built these 2 units. It's supposed to be one of the best places. That was the regeneration approach. We sold to Fashola, and Fashola bought it and gave us 8 sites same day. We attended the State Executive Council and they gave us this site. We were to use interlocking block. These 2 buildings you see there, they are still there. The slum ought to be regenerated. It's not that we have not attempted. We have done it. We can scale up and get it done. Change of government frustrated it. This also in Lasan. I took my students in Lasan, 200 of them. We did the enumeration of Lasan, and we gave them. Lasan is Yakonde, an island of poverty in the midst of affluence. We work with LBIS. They gave us 10 million naira. I took my students there for 2 weeks, and we came up with a proposal. Government wanted the land, and the people are saying that blood will shed. They will shed blood. That to move them away from this place, after driving there from Morocco, that they will bomb the place. We work with them. We said that, look, we have 60 hectares of land. I'm very sorry. I shouldn't have come. No, listen. I just finished 3 days conference. And the second day, I collapsed. I came because of commitment. I couldn't say no to it. We just finished international conference, attended by 17 African countries. The minister was with us day before yesterday. Please, I'm 65 years old. And we have been doing this talking in the last 30 years. We are living. If not that they extended the retirement period of professor to 70 years, I should live by now. I should have left. So let us just be sincere with ourselves. It's not as if we have not made effort. You see, how can you start this lofty project and it just be terminated? 200 students will work for 2 weeks. We said, government, maybe you need land. The people said they don't want to leave the place. We can get something. We divided the place into 3. We said 20 hectares for resettlement. Well, government get money to resettle. Oh, they can get the money. We said 10 hectares political settlement. 10 hectares is lot. 30 hectares for the developer. I'm a valuer. We know what per square meter is in that corridor. By the time we calculated it there, it was 91 billion. 91 billion is more than enough to build house for these people. Every slum in Lagos, every slum in Nigeria, they are prime land. You don't need government money to redevelop it. The land will fund the project. The land will fund, because all this slum, all you see there are bungalows, at most a story building. Just mass them up on 4 floors. You have released 75% of the land. They are occupying a big space on small chocolate bungalow. By the time you organize the land, you move them up. They just use 1/4 of the land, and the remaining 75%, the value of it is enough. And this is the model we are selling. We sold to. We did it. They clapped for us. United Nations gave us an award. What happened? Change of government. Story change. Change of government. Story change. So, in 1990, I'm wrapping up this slide. Don't be annoyed with me. In 2007, this is the model we invented for this nation. I was in the board of Federal Housing Authority with General Rees, Dori Adua. We presented this model to President Obasanjo, who appointed us in 1996. But they are on their way out. That let that be national housing, let that be the capital market, let that be housing development fund. The developers, the end users, mobilize into cooperative. So that until we put an end to individual building houses. Our case cannot be different. A young man left school in UK. He will say, I want to buy a house. In Nigeria, he will say, I want to build my house. It's the rich that build house. in those clans. People, celebrities, Muhammad Ali, Michael Jackson. The rich, they build. The poor, the average citizen, they buy. But in Nigeria, the rich, they buy. The poor, they buy. It does not correlate with international best practice. And that's why we have problems. Because you get to a particular street, my house is 2-bedroom, my value is 50 million. Your house next to my compound is 2-bedroom, your value is 2 million. Because 2-bedroom flat, when you get to any 2-bedroom flat in UK, you don't need to be asking where is the toilet. The toilet is standard. The houses were standardized. Until we standardize our design and construction, and so that we can say that this is the value. That's why a bank asks us to sell property for them that they use and collected and they defaulted. We found out that the value is not, you can't sell it for 1/4 of what the land. So this is the model we crafted for government until we go back to it, until we have macroeconomic stability, exchange rate that's a stable return. We have seen thank you. To strive in this time, there's an urgent need to change some of our dominant assumptions so that we can see different outcomes. We can't continue to sit every day assuming that mortgage will work the way it works in UK. We can't. And the problem at hand is that in this territory called Nigeria, 200 million more people will join us. We need to think of it. We need to work towards how do we solve our problem. I believe that this by bit, the meeting can put it together and come up with something tangible for this country. Thank you so much for the opportunity. God bless you.
You can join the Madam of God. Please a round of applause for him. Thank you. To thrive in these times, there is an urgent need to change some of our dominant assumptions to see different outcomes. Distinguished guests, ladies and gentlemen, if you were inspired by his words, please give him another round of applause. Thank you. He took my program. Thank you very much, sir. That was Professor Nubi, an erudite scholar, an advocate for affordable housing, and when he speaks, you see the passion with which he does what he does. And he told us that in his class he teaches for 3 hours, so you understand when you give a professor 45 minutes, someone who is used to 3 hours. Please, another round of applause for him. Thank you, sir, for passing your course for us. We appreciate you. A friend of mine told me he wanted to build a house, so he needed to get a loan from the bank. So I told him, I said, try this bank. He said, no. I gave him another option. I said, try this other bank. He said, no. Oh yeah, try this mortgage bank. He said, no. I said, so what are you looking for? He said, I need a bank that will give me a loan and leave me alone. And I told him that bank does not exist. So right now, I don't know what he's doing with himself. Ladies and gentlemen, we have to go to the next item of group photographs. And after that, we will have our panelists come forward to discuss some of the themes that Professor Nubi have raised today. He has talked about a lot of the problems that we have in this sector. And I believe that the panelists will come and try to dissect some of these issues to see how we can find solutions to them. The first plenary session will be on expanding access to affordable mortgage finance. And after that, we'll have technology, data analysis, or data analytics, and cybersecurity and innovations shaping mortgage finance. Please be around for those 2 technical sessions. And I believe that at the end of this conference, we will find solutions to some of the problems that we have in this industry and in the housing sector at large. Ladies and gentlemen, will we please rise as we come forward for the group photographs? All right, ladies and gentlemen, we have been told that we should do the first session before we'll take the group photographs, and then we'll go for a lunch break. So we're starting with the first session, which is on expanding access to affordable mortgage finance. Distinguished guests, ladies and gentlemen, the lead speaker for this session is no other but Dr. Roland Ibinoba. Please, a round of applause for him. He is the MD of Crowdy. A round of applause for him as he comes forward. Ladies and gentlemen, may I humbly recognize the presence of His Royal Majesty Oba Akintoye Adeoye, the President of VIDA. Please, a round of applause for him. Distinguished guests, ladies and gentlemen, I am aware, I've been told that our President would like to make a comment on the keynote address that was delivered by Professor Louis. So I would like to call on Mr. Ayodele Olokere. Please, a round of applause for him as he makes a comment.
Good afternoon, everyone. Prof, it's just good that we try to point out some things, because it seems that there's a disjoint between the session we had yesterday and what we have today. So at the mortgage banking level, mortgage finance level, which is a subset of the housing industry, mortgage finance, not banking, we noted that there's a lot of players in there. You know, you drew up a structure at the level of what you did on the board of FHA. Now we have players that have sort of fitted into that structure you drew up. We have MREF playing in that field in terms of bond lending and liquidity, to speak to long-standing problem of we don't have long-term money at good rate, so nobody should complain about it. Again now, not only through mortgage banks, but also through commercial banks. So you can approach your commercial bank to actually attend. We have family owned funds, and then we have the Federal Mortgage Bank also now partnering with them, because they want to be blending. When you say, oh, I'm bringing money, you're bringing money. So single digit, long-term money. What the mortgage finance side is trying to do, and I'm not saying mortgage banks only. So we have all these partners with NMRC doing refinancing, because I saw refinancing and securitization there. Is also doing its own part. Is that we have a lot of problems. We want to be part of the solution. We cannot solve all the problems. You talked about regeneration. We know we need to deal with people at policy level. Ministry of Land, Ministry of Housing at each state level. You only spoke about Lagos State. A lot of other states are also complicit of this same problem. So the Mban and other partners were setting up an industry working group with the support of CBN, the Ministry of Housing, Federal Mortgage Bank. In fact, the minister reached out today to me to say he's in support and is ready to work with us. Emory Family Owned Funds, NMLC, InfraCredit, all players. And our job is now to highlight the ones we can solve. To us, we are tired of talking about the problems. The ones we can solve. The ones we cannot solve, as a group, go to policy people, the fiscal people. I can't solve the inflation problem in Nigeria. I can't solve security, fiscal planning, tightening issue, land problem. You know, that is the joint work of Lagos State, Omonile, and security people. Sometimes security people are also helpless. So the ones we can solve will solve them. That depends on us. Giving ourselves timelines. The ones we cannot solve, we will approach them and work with them. Emily was talking to the minister on the cost of perfection when it comes to those loans, because there's stamp duty appearing twice. So I'm agree that we will approach the minister. So that there's nothing disjointed, that we are not really helpless. Yeah, so we're going to be part of the solution. Then secondly, sir, before I drop the mic, so sorry, we spoke about collateral security. As mortgage banks, we take land and property as collateral. In fact, we prefer it to your stock. If you have stock of 500 million and you give me a land with a bungalow on it, what 100 million, I would rather take it. It's going nowhere. Maybe before, or some commercial banks might prefer something that is more liquid. It's a risk preference. But for mortgage banks, we take them. It's our number one. I prefer them to all those other things you mentioned. Because there's also a lot of people attending online. Before we have the panel, it's possible they log off without that. Oh, so they don't take this again. And then what will be the headline tomorrow will be property no longer, they are going to misquote you. So I'm telling them online that we still take, we don't take. That is our priority. And continuously, as we engage people like you as well, you also help us with your years of knowledge. You will not be tired by the grace of God. God will give you strength. After age 70, God's going to give you another 5 years. You tell the federal government to still extend it, so that people like you can be useful to us in this industry. Thank you very much.
Make it louder for the president. Thank you very much, sir. Thank you, Mr. Ayodele Olukiri, the president of the Mban Association. Ladies and gentlemen, at this point, I would like for us to go straight to the next session, expanding access to affordable mortgage finance. Like I said earlier, the lead speaker is Dr. Roland Iminova. Please, a round of applause for him. And the Prof. Crowdy. When he's done with his presentation, then we'll invite the rest of people, the panelists, to the stage.
Thank you very much. Good morning. Good afternoon, everyone. Okay, so a lot has been said around housing, mortgage finance, and what we need to do. And Professor Numi, thank you for always the inspiration. You know, when I see you with all your passion, then every time I get frustrated and I want to jump out, I say, no, you know, Professor Numi is still in this game. He's still trying to make it happen. So a lot of encouragement.
So I'm going to be looking at opportunities. I'm not going to touch on all the slides, right? I'm just going to touch what is relevant to the conversation, expanding housing, access to affordable housing. And I have a few pillars. I'll leave all of this introduction. We know what the market is in terms of mortgage to GDP ratio. But an important point that I want to speak to in the course of the presentation, because I'm also going to be sharing what I think we should do in terms of NHF penetration. So we have less than 10% in that regard. Let me know. We know what the problems are, so I'm not going to stick with the problem, right? But what do we really need, to expand access? And I think that, again, we touched on a few of them yesterday. I've tried to look at 5 pillars for affordability, okay? And this is something that we have touched on. But I think that it's something that we should look at again, just to see how we can scale. And I'm very excited that we have a lot of the government agencies who are doing a lot of things to help us in terms of affordability. So single-digit interest rates, we already have that in the market. It needs to scale. Extended tenures, right? 20 to 30 years. Professor Ruby said something that I think was very profound. Which is increasing the retirement age for professors from, I think, 60 to 70 or 65 to 70, right? The reason is because we know that knowledge, even I went to a program I'm working in Pennsylvania, I think it was 2009, where we had an 80-year-old professor, teaching, right? You remember, right? It was 93, it was at 2009 when I went for that program, right? He was 93 years old at the University of Pennsylvania. So I think that today, if you look at affordability, and we keep having this conversation. So when I'm 60, if I wanted to get a mortgage loan in the country, if I'm 50, I can only get 10 years, right? If I'm 55, I can only get 5 years. So we need to think in terms of, we already have a challenge. We are not penetrating mortgage in the country. Is it possible that we can extend to 65? Yes, there are arguments around. Why are you shaking your head? I should give you life expectancy. Life expectancy is in numbers, right? Is it, life? Yeah, I hear you. But life expectancy is in numbers. Don't we have people living in Nigeria who still live till 70, 75, even though our life expectancy is like 51, right? So yeah, so I mean, seriously, I think it's something that, in terms of our underwriting criteria, we should begin to take a look at. Lower equity requirements. Again, yesterday I mentioned, right, that MREF very well noticed that, at 20%, we were not getting traction. They brought it down to 10%. I dare say this is where mortgage default insurance needs to come in. And I think we had a conversation yesterday, and thankfully, the MD of Home-Based Mortgage Bank, Arize, made a call to the guy at, Credit Guarantee Corporation this morning, and he was willing to have a conversation. So that's good news as a fallout of yesterday. Okay, rather than trying to set up NMTC, can this be a product under the Credit Corporation? Please, thank you to Arize. A round of applause for you. It's very actually the conversation that we had yesterday. And then transparent processes, right? We need for them to be, when a home buyer comes to Bank A or Bank B, he needs to know that the journey is the same. He needs to know that the experience, it may differ from experience, but he needs to know that the same documentation and the same type of things that Bank A is asking, is Bank B is asking. Maybe what then differs is the coffee that he gets served when he gets into the office, right? Or the sweets that he gets served. But in terms of the customer journey, I think it should be the same. And then we're looking at the mass market for housing products. Is it possible to supply the market? Maybe 5 to 15 million is not possible. Maybe somewhere we should be looking at, maybe between 5 to 25 or 5 to 30, right? So I wanted to spend some time on that 5 pillars. Technology or it's somewhere there. Okay, maybe that's why I did that technology. So they are fighting, right? Okay. I think this has really moved far. Okay. So for the average worker, let me run so that those were enabling pillars, right? But I've also talked about in a way what strategic pillars would be, and I try to differentiate this to say that what really needs to be done. A lot of these conversations have been spoken about, but I'll dwell on things that I'm looking at the end of these 3 days, right, or 2 days. We can then take back and action on. Again, like I said, just like the example that the NDO from Miss Mobile Bank has done this morning, right? We know that this is a challenge, so I won't dwell on it. We need to go back and find out how we will solve this. You know, you can't do anything around fundamentals. Okay, fundamentals are critical, and you have to deal with fundamentals to be able to move. Just like the president was saying that, look, you know, there's nothing I can do about macroeconomics, right? It's not in my power to do anything about macroeconomics. So if that's something that we must look at, then we should look at it. And some of these are mortgage foreclosure law, the national land titling system, harmonization. Of course, we've been having this conversation around coordination with the agencies. I can spend the whole week, you know, making presentations of how these agencies will be coordinated. So I won't go into that. But there's something that is important that is coming. I talked about it yesterday when I made the comment, and that's the tax incentive, right? As players and actors in this market, I think we need to begin to collectively come together and look at how we can get reliefs and benefit around taxes, okay? Now, something that we must know, whether we like it or not, every transaction from January 1st, 2006 will have a tax moment behind it. It's either you are getting a relief, you are asking for exemption, but every single transaction from January 1st has a tax moment in it. So that's something we should begin to look at. And we'll continue to have that conversations around tax, but it's something that we can help to expand housing. Let me take an example with NHF. So NHF is tax deductible. So that your 2.5% that you pay or that they deduct whether you like it or not, right? And a lot of you haven't gone to access NHF, and I don't know why. You know, you just need to try and access your NHF because it is possible to get FNBN loan. You know, even up to 50 million. I'm not campaigning for FNBN, but I think a lot of you who haven't done it or you have siblings or people, you should try and access it. But you see, with the new tax law, it just means that if you do a voluntary contribution, increase your NHF contribution, what it means that you can actually get tax relief. Now, those are some of the little things we can look at in terms of how to drive affordability in the market. Because what happens is, with enough, we heard yesterday that FNBN generates about 100 or 120 billion, right? 120 billion per annum, right? So just imagine that if you double that. So if voluntary contributions gets to 2.5%, it means that FNBN can actually do 240 billion. And what happens is that provides more money to expand mortgage to that market. Let me try and run through, because I know the panel needs to come on. I think in terms of standardization for skill, this has happened. There's underwriting, there's a uniform underwriting structure in the market. Now, deepening long-term funding access. We know that there's NMRC, we know that there's pension funds, and we had conversation around what pension funds should be doing yesterday. But I think an area that we haven't really looked at is climate finance. And you see, again, what I've seen in the market, in working, how many years now? Maybe about 22, 23 years in this market, right? It's highly fragmented, okay? And I think this is where what Umpan is doing becomes very, very interesting. I think we should begin to look at how do we explore climate finance, right? How do we key on a lot of the sustainability, grants, funding that can help to expand mortgage finance. Okay, I think this is also an important slide that I think is already happening. We've seen how blended finance is working with what MRIF has done, but I just think that, as mentioned yesterday, a lot of that blended finance needs to happen between interagencies. So FNBN partnering, collaborating with MRIF, collaborating with family home funds, and then you can get a lot of blended finance to the market. Now, in terms of the place I want to stay here, are basically two pillars in terms of the third pillar, which is digital transformation. And this is why this is important, right? Now, two bits. It's about data. It's not just that you want to make mortgages via a technology platform. It's that at the back of that technology platform, what kind of data do you have? How do you understand who are the type of people borrowing? Are they people who work in FMCGs, or there are people who are academicians, right? Who are the kind of people? Now, it's not that we don't have that data, but it becomes very difficult rather to look at paper trails than to go to the back end of your platform and then you see exactly what's happening in terms of that. Now, and that helps with alternative credit data. And I also talked on this a bit yesterday, to say that, look, how are you financing in a country that is largely informal, right? We've been talking about informal market. When are we going to actually start to fund that informal market at scale? We know what the fintech platforms, what they've done, and how those guys have scaled. And today, I think your mic is gone. Okay. So I wanted to touch on those 2 points in terms of digital transformation and strategic pillar. It's power. Even the slides are not moving. Thank you. Point it this way. No, maybe the thing requires you should be able to push that. Okay, now a centralized mortgage place. I know that there
to make this happen, but I think the right time it's now, and I keep calling on collaboration, because if you look at how the market is structured, right, a lot of these platforms requires funding to do it. And when you look at one mortgage bank trying to fund all of this, it can really become a challenge. So just imagine if you have a marketplace where everybody who wants mortgages in this country will come to, right? And I'll tell you, an attempt has been made at this. In 2013, Femi, remind me, yes, you will remind me, I think then it was the Minister of Finance, maybe Mr. Motosha will remember, where they asked people to come to a platform, right, for mortgages, right? You said what? Absolutely. And we got about 67,000. So you can imagine, it was 2013, yes, I'm right, right? When government wanted to do, they were saying, okay, we will do 10,000 mortgages for people. And we had Nigerians 67,000 registered. I'm not saying it's because it's federal mortgage, but it's because everybody at that time, because of the promo that went behind that platform, everybody was registering. Okay, so I'm saying that as Umban, maybe those are some of the things that we should begin to look at collaboratively, because what it then means is that there is a marketplace where everybody comes to who wants to originate a mortgage, and from that platform, people can then choose the different originators and underwriters that they want to deal with. Remember, I'm still talking about expanding access to mortgage finance. So if I'm going out of my scope, please let me know. Home buyer support, I think here a few things I want to talk about is interest rate buy down schemes, right? If this is not abused, it is a subsidy that says, you know, government can subsidize a portion of your mortgage. It's been done in several other countries. You know, for example, I think in South Africa has the savings link subsidy program. I think I have it somewhere on the slide, right? There is down payment assistance, which is where the mortgage default insurance or the credit guarantee comes in, and then there is the, I think we are all conversant with the rent to own programs. So pillar 5, expanding affordable housing supply. How do we ensure, right, that in terms of cost? Now, we had conversations yesterday where we were saying that if you wanted a mortgage for 50 million, I think it was the president that mentioned, right? If you wanted a 30 million naira mortgage, you will need to earn ₦1 million. Now, part of the reason for that is also the supply cost of that mortgage. the supply of the underlying asset, which is a challenge. So chances are, if we are able to take this as a manufacturing concern, really, that's what needs to happen. And you see, again, this is where, as a body, we can begin to push certain things. It's not for one, just like Professor Nubi said, it's not for one that people haven't been pushing. But I think we are in a space, you know, everything they say, it's time and chance, right? But you must be prepared for it. So maybe this is a time that we should go back and try and look at a lot of how to increase the supply space. Again, land at concessionary rates. I think all of these are transaction structures that we know. Yes, I had technology and data infrastructure, okay? So in terms of the pillar for technology, right? There are prop tech platforms, there are property verification system, there is digital land registry, there is housing analysis dashboard. I think that, I know that out of this, this last quadrant here, I'm not sure if anybody is working on that quadrant now, but I know for a fact that Lagos State is working on digital land registry, and also is a portion of the verification system. So for example, Lagos State is going to launch a portal where if you wanted to check the approval of a building, right, you can do that. I think that work has been completed. It was done by Sitemap. And for those of us who know, Sitemap is a prop tech platform. So what's happening now that is that when you put your data on that verification portal, right, it will trigger off if you don't have an approval. So what it means, if you want to rent or if you want to buy, it flags up that, look, you cannot buy this property or rent this property because they don't have approval. It might be that you have approval, but it's also a call for the owners of the property to then go to Lagos State government to go and then register their property. So that's how technology is enabling. Now, I've talked about this briefly in terms of informal sector. We need to look at the credit scoring system. I know that it's very difficult to underwrite a mortgage, you know, when you cannot see the payment. So every time we use the examples of civil servants, okay? But forgetting that these guys have other incomes. I hope we agree that they have other incomes, right? Okay. So they have, no, including prof, yes, including prof, right? So we know that they have other incomes, but how do you underwrite mortgages for them based on these other incomes, right? Okay, so a central housing finance database, I think this is also very important. Again, I know that there's a lot of work with Ministry of Housing, NMROC, and all of that. But you see, what needs to happen today, if I asked everybody in this room how they get data for the housing market, who goes to the central housing portal to look for data? How many of us in the room? How many of us in the room even knows that there is, or the data is not operational, the portal is not operational yet? Oh, it's not operational yet. Oh, okay, interesting. So this needs to happen. Again, if we want to expand access, there's nothing we can't be groping in the dark in 2025, and we want to expand mortgage finance in the market, right? Okay, so I think this is the last pillar, ecosystem coordination and institutional alignment. I think that this probably is the biggest of them all, and that is really the crux of my presentation. Is just to say that, look, we all need to work together, whatever the agencies, because what's happening right now is, I mean, when you get into the nitty-gritty of how these agencies operate, you almost would, you know, trust me, it's not really nice, you know. I think we need to find a way to coordinate better to expand access. So let me just run to okay, so a few looking at models from other countries. Okay, so for example, in Morocco, what has happened is that they established a comprehensive credit guarantee fund. Again, this is where the NMGC comes in, and thank God for the Credit Guarantee Corporation now that UMBA will now start to have conversations with. So it's very important, because what happens is you are helping expanding that that access to affordability. So rather than the 10% equity contribution, you can take as low as 2% or 5% equity contribution, because there is a credit guarantee insurance on that transaction. In Malaysia, what these guys have done this very well. If you enter Malaysia from Foviste to Infonavit to a lot of all the primary mortgage underwriting firms, they all have their different roles. If you go to Foviste, for example, they tell you this is not our role, go to Infonavit. Foviste is the public sector version of NHF, while I think Infonavit is the private sector version. In that market is that everything is coordinated. Subsidies, developer incentives, tax breaks, everything is coordinated. And I think that's what needs to happen if we want that. Okay, I think I briefly mentioned the South Africa Finance Link Subsidy Program, where there is a gap of people who are too poor, who are too rich to get into the subsidy program, okay, but are too poor not to be able to afford housing. So they call that a gap market, so to speak, and there is some form of funding for that gap market. So I think for me, right, if we can action some of these steps, we're looking at some number of moving where we are now at less than 5 to about 10 or 15% in terms of mortgage to GDP ratio. And I think that's my presentation. Thank you very much.
You can do it better than that for him, Dr. Roland Binoba. Thank you very much, MD Prop Crowdy.
Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. My voice is higher than yours. That's not fair. Good afternoon, ladies and gentlemen. Now, you can see that I'm sitting by the room of my company. I like this arrangement. Lady, guy, and we are all CEOs. So this session will be very practical. Here are a lot of questions. The audience, please, you have AA. Is that agreed? Let's go with the presentations that are made today. And I think we all listen to it. So this will be a practical session because Professor has given us a lecture. And by that lecture, all of us are entitled to BSc. Prof, as the Senate approved. So this is a practical session. So we'll be going through some questions. Please, when you're giving your answers, cite practical examples. Is that okay? I'll go right to the first question. That's animals. You have mind? What frameworks exist for refinancing and secondary mortgage market, and how can they be structured? What frameworks exist for refinancing and secondary mortgage market, and how can they be structured?
Framework we have for mortgage refinancing and also for secondary mortgage financing is we have the Uniform Underwriting Standards. So that underwriting standards is a regulatory document. The document was developed by MBAN and also in collaboration with CBN. Eventually that document was approved by the Central Bank, and it is the Uniform Underwriting Standard that is used for all the mortgage refinancing transactions that is done at the NMRC. In addition to the Uniform Underwriting Standards, we also try to conform to sustainability practices and principles. So we have a combination of the sustainability principle from the Central Bank of Nigeria, and then we also incorporate the World Bank exclusion list, and then the IFC green finance provision. So putting these together also form another sort of framework that we use for mortgage refinancing. What we do is banks that come to us for refinancing, we have developed a checklist, a sustainability checklist that they use for screening and when they are also underwriting mortgages. We also go a step further to ensure that these banks also imbibe sustainability practices in their business operations. I want to mention the third one. So one of the framework that we also incorporate in mortgage refinancing is an anti-monetary laundering framework, just to ensure that all the AML, CFT, and CPF practices, the laws, anti-money laundering laws, that we ensure that we are fully compliant with them as we do all mortgage-related transactions, both directly and indirectly. So a combination of these three frameworks help us in the administration and deployment of refinancing transactions. I also like to mention that we drive this also through the use of technology. So we have the mortgage market system. That's the banks that we deal with. The mortgage origination is usually done through the system, and also the refinancing of mortgage portfolios are also done through that system. To extend, so there are several other frameworks that we do in collaboration with the other stakeholders like the mortgage administration law. We try to work with the central bank, BAN, and also FNBN and other stakeholders to see that different states in the country adopt the mortgage administration law to also help drive mortgage origination and by extension mortgage refinancing. Thank you.
Round of applause for our please. Thank you very much. I would like to call someone. His name is Mr. Kabiru Adeniyi Yaguyaju. Yes, no problem, sir. Yes, I want to ask you. Sir? Oh, doctor. Please, next time. Please, stand up, sir. I want to ask you a question, and I want you to address these partners. The question is, how does FMBN plan to address land tightening bottleneck, land title bottlenecks, which significantly raise housing costs? And what incentives are created for developers to focus on low income and affordable housing? Should I go over again?
No, I got your question.
Thank you.
Thank you very much. Okay, good afternoon, everyone. My name is Dr. Kabir Adeni Yaku. So, with regards to the issue of titling, because that's the first aspect of your question, we've always been in touch with state government officials because, like you rightly know, the powers and the authority in terms of land administration lies with state governments. And that we've always been doing with state government officials by way of, at some point in time, actually got involved with the Governors Forum, where we were allowed to address the governors. And we actually addressed the issue of perfection fees, saying that if they could have a uniform perfection fee, and even try to bring technology into how the processes of getting titling documents issued, it will go a long way in easing the pressure within that space. We all know what Lagos State government has been able to do in terms of digitalizing their process, and of course a couple of other states have that in place as well. So for us at FMBN, we've worked with state governments through the Governors Forum, trying to address the issue of fees they charge on perfection of title documents, and as well the issue of how they process title documents, so that that can make it easier for developers that comes to FMBN for borrowing to be able to provide legitimate title. However, beyond the issue of titling, in terms of cost of delivery of houses, again, we've tried as much as possible to work with state governments in the past. We tried to look for other ways because the initial approach that we adopted seems not to have worked effectively the way we wanted it. We wanted a situation where state government could come into housing to collaborate with FMBN in terms of infrastructural development for housing programs that we finance, wherein state government could provide land and possibly even provide road network within the estate and possibly provide light or electricity, so to say. But that hasn't worked in recent past because we found out that even the primary road to site, which ordinarily should be the responsibility of government, state government don't do. So if they don't do primary road, how do you expect them to do secondary within the estate? But again, through the ministry, through our supervising ministry, we've been able to reach out to some very friendly state governments who actually donated land because it wasn't all bad story, so to say, because we must make that clear. Some state governments has been able to donate land, which significantly brings down the cost of houses, because we all know, for example, in Abuja, if you're not building in the very remote area of some places, maybe Karu, Kuje, and some other places. If you want somewhere very close to Lugbe, Kubwa Road, and whatever, you will be talking of parting with billions of naira to acquire massive expanse of land that can actually deliver mass housing for off-takers. And that in itself will impact significantly on the final selling prices of the houses. So where we have state government giving us free land, so to say, with genuine title, we welcome it a lot. And of course, in some instances, they provide some road infrastructure and some other facility within such a state. Thank you very much.
Thank you very much. Thank you. Thank you. Since you mentioned Abuja and those areas that you have to give billions of that. So I'll go to Infinity now. Infinity Mortgage Bank PLC. What strategies are you putting in place to support first-time owners and young professionals like me to also have access to a home?
Thank you very much. I will call it your profession. Okay, so for first-time homeowners and young people generally, whether professionals or people from the sector, what we try to preach is thank God that EBRIF came and then they lowered the bar in terms of what you have to contribute as your EPT. But even then, even the 10% for some people is still a struggle. So we encourage people. We have products which allows you to save. So it doesn't matter how small your salary is, even if it's 100,000 a month, you set aside something on a monthly basis. And over a period, maybe like a year, 2 years, you're able to save up enough to put down as EPT contribution. Because I realize that this is one of the most difficult parts of owning a home for some people. Raising the EPT contribution, that bulk sum. So for young professionals who just started working, they haven't saved up money to be able to buy a home. So we encourage them, save towards it. And one other thing that does is that because you've saved for a period, so you are also able to repay when you eventually take a loan. So let's assume you were out of 100,000, you were putting aside 10,000, and you eventually get a mortgage. Giving out that 10,000 on a monthly basis from your salary won't be a problem because you've adjusted your expenses to 90,000 out of the 100,000. So that's what we do. We have products that allow us, and then we pay fantastic interest on those savings you are making with us. And then we also give them concessions. So because you save for a period, we're able to even lower the interest further for you to be able to just encourage you to be able to get a home. And then of course we do advisory. Because you're just starting out, it's your first time. You're going to be looking for a house in Mintama or Asoko or something. We help them to even align them with developers who are offering products that are properties that are not too expensive in locations that may not be their immediate choice.
Like where?
Mr. Yahweh or Dr. Yahweh mentioned Kuje and the lights. Those
Kuje, very close to the prison.
No, they have big expanse of land. We have developers building houses that are very affordable. You can get 15 million, you can get 20 million. So we encourage them to start out from there. So you buy those ones that are not too costly, you pay off. Sometime in the future, you might trade it to buy something higher in a location where you prefer. So that's one of the things we do to encourage first-time homeowners and young people who are just starting out.
Thank you very much. Round of applause for our please. Delta Trust. As a rider to what she has said, there's a cap for non-performing loan. Project guidelines for Mortgage Bank is 10%. But for commercial bank is much lower. At Delta Mortgage Bank, what steps are you taking to strengthen asset quality and reduce non-performing loan below 5%? Is it possible?
It's a tough one. Hello? Okay. It's a tough one, really. Before I start, I want to thank all the various discussants to this wonderful conference. I really enjoyed myself and benefited a lot from lecturer, a great one. Regarding the question you just asked, what we do is, before now, it was not so, but what we do now is we make sure we profile our customers, profile them, and at that point of profiling, to ensure that they have the capacity to pay for the loan. That is in the first instance. Then, after the loan has been disbursed, we also set some other machinery in motion. One, you know, mortgage culture, we are still in this part of this world, we are still trying to sensitize and encourage people. Most people, they don't really believe in the concept. They believe in building. So what we do from time to time, we remind the customer of their due date of repayment, either through digital or through phone call, formal or informal. With that, it has greatly reduced the level of indebtedness and default. Then another thing we also do in debtor trust, particularly regarding the informal sector. I'm a little bit digressing from your question now, and also in an attempt to answer it, is we launched a scheme called Profit to Property recently. And what is the essence of that scheme? We go into the informal sector, we go into the market, we meet the Okada rider, the petty traders, we encourage them to come and save. And that little thing that they are doing is very possible for them to own a house gradually, like our professor said earlier. In the past, you see headmaster building a house within 5 years. But that is not so now because of high inflationary costs, government policies that have militated against that. So what the approach we do is we encourage them by giving them a soft loan to enhance the little business that they are doing. One, our staff go there regularly to do what we call pick-up. So they have history of these customers in the informal sector. And we advance them loan. Percentage of that loan goes to enhancing their business. Then some portion of that loan, that is by way of repayment, goes into an account that they save towards owning a house or towards having equity contribution to own a house, you know, just like that. And that product is really being embraced by the populate. So with that kind of scheme, we know the customer, we know their capacity. So any loan that we give to them, eventually, the defaulting rate will be very low. I want to pause at this juncture. Thank you.
Currently, if you want to take a mortgage loan from a bank, what's the interest rate? Any mortgage bank? No, your bank's. Which one were you doing for the terms? 30%. Can you hear that? What was your rate? 10.35. Man? 20 to 30. Can you hear that? So I want to announce to you the best man in the building. His name is Mr. Olubiyi Adekunbi. He's the only man given a single digit loan.
He has an elder brother here.
So this question I want to ask you, it is not my question. The president asked me to ask you, and I'm happy he's not here, so I can deny when he comes back. Now, he said, and I said, are you ready? What regulatory reforms are you considering to reduce further the mortgage interest to encourage long tenure for old guys like me?
I would say, coming from what we've done so far, it's been great. And just a little bit of background as to how we're able to achieve the interest rates that we currently have. It's a function of blending concessionary funding from government as well as commercial investors. Those two pieces of funding was very critical from the perspective of having low interest funding from the government to reduce the funding from the commercial investors, right? And the commercial investors piece was very crucial to ensure that we were able to achieve scale because given the size of the amount of funding required, if we were to rely solely on the government, right, then it would have very, yes, the interest rate will be lower, but the gap is still very large. So it's important that the private sector is support, right? For example, the pension fund industry currently sits on about 20 trillion. There is a need to be able to tap into that funding, which is why the government has it's necessary to increase that scheme and then go from there. In terms of being able to achieve that single interest rates was largely based on the macroeconomic environment because at the time we went to the market, the commercial investors on this benchmark to the 10-year yield on this 5 basis points, right? Which at the time we went to market was about 20%. So blending, giving investors a return of 20% and giving mortgages at 9.75, that there's a serious, there's a significant gap in between. What will be able to allow us perhaps go lower will be if the market rates continue to decline. That means that the expectations for the commercial investors will decline, and then the pressure on the level of concession that the government will have to give will reduce. That way, interest rates can for a long period of time. Then, if interest rates continue to remain high, then that's what we build to. So there's very little subsidy.
More subsidy. Don't have the food of fuel. You can put it in the house.
Well, cases can be made for it, but the extent to which the government, just to be respectful, the government return on the funds already is 1%. Anything lower than that is 0%. So yeah.
So what about multilateral funding?
Yes.
Do you have access to that kind?
So the initial funding that we raised was to create a pilot that can now demonstrate to the international community, the DFIs that can provide additional funding to also provide additional funding. But I must say that from conversations we have had, it's very unlikely that they will be able to match government 1%. So they will have to end up somewhere in between what the government is providing and what the commercial investors are getting. What that means is that they are going to end up somewhere in between, and their funding will help us achieve more of scale than exactly than lower interest rates.
Thank you very much. Round of applause for you, please. Mr. Kosho Bodi, am I right? Yes. You are the head of Affordable Housing Fund. I've not gotten one. So can you better So what can you do? What should we expect from your head?
Thank you very much. Okay, I think I'll start by first apologizing or conveying apologies from Montserrat. Montserrat heads the Help to Own Fund, and I head the Affordable Housing Fund. Montserrat is unwell at the moment, so I'm standing in. I came in here to represent the Executive Director of Operations, but someone has to fit into that. So I would say for my fund, there's the Help to Own, which is the mortgage, which is what Montserrat heads. But from the Affordable Housing Fund, would say that how we've been able to work around that is we've been able to partner with state governments to get land for free, like FMBN had said, get land for free, and then we've given loans in the past as subsidized interest rates. So we've given loans as low as 7%, 9%, 10% to state governments, which have been secured by ISPOs. So on the strength of ISPOs, we're bold to say that we do not have any non-performing loans. So because the cost of land has been, it's almost zero, it makes the houses more affordable for the end users, for the off-takers to pay. Now, in some states, houses have been subsidized apart from the land. So if the cost of production is, say, 10 million, some states have subsidized it to 7.5. So we've been very successful in that. We've been able to finance projects in 10 states under the ISPO transactions. We've also been able to finance projects in 4 states on a different arrangement in what we call the legacy fund, legacy homes in 4 different states. So in total of about 14 states. So on the mortgage part, which is what Montserrat covers, we've been able to attract some funding from DFIs, notably AFDB. We've been able to get single-digit funding of $60 million US, which is what we're also using to blend with MREEF funds to be able to achieve lower interest rates. Thank you.
Thank you very much. Round of applause for me, please. Then last but not the least is my sister, Gateway Mortgage Bank PLC, and she's the newest MPC in town. Congratulations. So I'll make your question easy, since you are new. Madam, how do you evaluate borrowers in the informal sector? And what adaptation have you made to traditional underwriting models so that affordability, accessibility can be to more people? Thank you.
Okay, thank you. Good afternoon, everyone. So in Gateway Mortgage Bank, let me first of all say that, affordable housing, we have the formal and the informal sector. And when you look at the number of mortgages that the industry has created, you find out that maybe about 99% of that total mortgage are done at the formal sector. And when Prof was making his presentation, he said that even the informal sector, the civil servants, a lot of them are not even covered. Because when you look at their salary, we always feel they can't afford the mortgage. Even when you look at the supply side, you see properties that maybe 2-bedroom, even in Ogun State, where we operate, property prices have moved. The prices are very high now, and you'll be wondering, Ogun State, what is happening? So what we have been able to do to also have that financial inclusion is to look at those informal sectors, to look at how can we meet them halfway. So we created a product called supply mortgage because titling was an issue. You can see that they have that cash flow. Some of them, they have properties. Maybe they built many years ago, and they have registered survey, they have this, and they want to buy another property. So what we usually do is that, okay, what's your cash flow? What does it look like? We look at their cash flow. We try to understand the business that they do. We have a lot of those Igbo boys around Mui side, and they are doing pretty well. And if we say that, oh, because you just want to create loans for those first-class guys, we may not address that affordable housing. We may not reduce that housing deficit. So what we've been able to do in Gateway is to create that product called subprime mortgage. So some of them, what we do is we don't have that financial muscle to do a title perfection. We spread it over the loan period. So, and sometimes we have our legal guys, they trust, but they have good relationship with some of these Bureau of Lands. So sometimes we take register survey, we take the agreement, and we decide to say what will perfect it for you. So that when you are coming next time, by the time you buy this small property and you want to buy another property, we will have perfected your document. And that has really worked. The default risk is not that high because we know their houses, we have a relationship with them. So this has really helped us in terms of the informal sector. Then when we looked at the MRIP, the FHF, to also, because I remember that I had a discussion with Montserrat when she referred a lot of this your property in, I can't remember the name of the estate, but it's FHF property. Yeah, Nasarawa. You know, and we saw properties of
when you say
Nasarawa.
In Lagos?
No. We do transactions, you know.
From Ogun State,
yes.
Nasarawa?
Yeah, there's no regulation that says you cannot do that. The only thing is you cannot have a branch, but you can operate.
No, I mean, people in Nasarawa they also buy houses as well.
Sorry?
People in Nasarawa, they buy houses as well.
No. In Nasarawa, some of the customers that wanted to buy properties with FHF at Nasarawa, Lubu Estate. Yeah, that's Lubu. So the Monsura had a lot of those informal sectors. And she told me that most of the mortgage banks, they stylishly rejected them. And I said, and I know our passion, we also share the same passion, that the people that really need this housing are those guys that low income earners. How are we going to, if we keep concentrating on the big guys, we have not solved any problem. So I said, okay, bring those informal sectors to us. We were able to, package it in a way that even the title perfection, it was my discussion with her that she took to her board to say, let's add it to the loan. That FHF will lend them money for the title perfection. So we've been able to do all of this because we don't just want to remain doing the same thing, like we used to do, and we expect the different results. So I think that financial inclusion is very, very key. And I think a lot of mortgage banks should look at that informal sector a lot. Let's look at it.
Wait, you know Prince Estate?
Yeah, Prince Estate.
And you did it with NMRC.
That's what I wanted to talk about.
So tell us how you achieved that. Is it not 6.5?
It was 11%. It was done at 11%. So, kudos to NMRC, especially Felix. Felix was very instrumental. So when the state government was building those houses, we approached NMRC and we told them that, see, we want to sell these housing units to the civil servants. We don't want people, those guys that will come from the diaspora to come and take all of this unit. Some will even use it for investment. They buy, put it back in the primary, the secondary market, which was not the purpose of government driving that affordable housing. And we sat down with them and we told them that these civil servants, they don't have, their salaries are they may not meet that threshold of that 35% based on the credit on the writing standard. And they gave us a concession that, okay, we can do up to 50%. And we had salary domiciliation with the bank. So we were able to do, I think about 85% of the homeowners in Prince Court are civil servants because we were able to achieve that with NMRC. So it's to now rewrite the story. Rather than NMRC saying, no, it has to be 35%, but they were very magnanimous to increase that limit to 50%, and that was what made it happen. Thank you.
I think there's a problem here. Why only Gateway? Did you have that collaboration with the NMRC? What she did for Gateway? Let's protest.
So we also do informal sector.
No, I mean NMRC's deal with Gateway. Do you have that in your bank? It's not fair now. What do you think? Support me now.
So this was specific. I guess they had interest in the particular property, and they approached NMRC to find a way to finance it for the civil servant. But the other thing I wanted to say was there's an underwriting standard for the informal sector. So yes, there's inclusion. The NMRC underwriting standard allows us to, for the informal sector, they don't earn salary. So we can look at their 1 year statement of account for those of them who actually put money in banks. And then we can discount by 5%, 10%, or 15%, depending on what kind of business they do, what the nature of the business is. So we're able to, of course, if you limit your funding to just the people in the informal sector, of course we can't. We won't do a lot of business. So yes, we all do the informal sector. We just find a way to do it. We find a way to analyze their cash flow and see that they're able to pay. The truth is, they are more risky because for those of them who are business people, there's volatility. Something can happen and then you lose. I mean, I've talking a practical example. We've had customers who said, their shops are demolished and so they are not in business anymore, they can't repay, and then you struggle to find a way to get your money back and all that. But notwithstanding, we're able to accommodate them, we're able to do business with the informal sector.
Thank you very much. Round of applause for please. So last question. And then each
I would like to make a comment. So I would just like to shed some light on some of the data that MRIF is already seeing in the markets. As you know, MRIF has done over 1,000 mortgages since inception, and those mortgages have been done in 21 states across the country. Everyone will guess right when we say Lagos and Abuja are the top states, but I would like to throw it open to see, can anyone guess what the third state is? Where the most mortgages are being done? Nasarawa.
Now what? What's happening with
Nasarawa. And I'll tell you why. I will tell you why. It's just beside Abuja. So it's like some go to Lagos, right? And the government is doing a lot to ease
Nasarawa.
Yes, Nasarawa state. In Abuja, for example, you can't have a legal mortgage on Arrow Road. In Nasarawa, you can do that. So it's easier to do transactions and property prices are lower. You can find properties for 20 million. The MD of Modern Shelter was here yesterday. He's one of the major beneficiaries of MD. He has a very large Nasarawa Technology Village in Nasarawa, and that's where a lot of transactions are happening. So I think there's also that need for stakeholders to start looking at other regions beyond the key commercial centers too.
So you had yesterday when somebody was mentioning something about having paid a visit to Nasarawa, the collective of Bank, CBN, NMRC, and one or two stakeholders were paying visits. Nasarawa was the first point, and that is the game, because every Nasarawa keyed to this initiative, and so proximity to Abuja, likewise proximity of Ogun State to Lagos. Those are the huge advantages that can draw. So like you said, we need to do more, but the states also need to accommodate more. So if Nasarawa accommodates, why don't you finance Nasarawa? Like the gentleman was mentioning the last time, why don't we finance the citizens of the states that provide land free, so that we could do inclusion and then make other states to keep into such initiative. Thank you.
Thank you.
Thank you very much. I would like to say a bit more about the Gateway State Civil Servant products that we did. So the house prices came to 6.5 million per unit.
The duplex.
6.5 bungalows and it looks unbelievable. So we engaged the Ogun State government and both the governor, the Minister of the Commissioner for Housing, and we were like, okay, how were you able to achieve this house price? And they told us that Ogun State engaged Lafarge, engaged Towa Aluminium, they engaged some companies that are into tiling. So by the time they did all the engagements, so they had direct supply, and they also enjoyed the economy of scale. And also they locked in the prices such that, so if the agreements and the engagements were made like maybe 6 months ago, 6 months after inflation and everything caught up with prices, but it did not affect them. And that is why even the paints that were used, everything that was used, the lighting, everything, they engaged ahead before the construction started. And that was why they were able to achieve 6.5 million per unit. Wow. Yes.
Madam, any available plans?
Those houses now are going for 20 million. The secondary market. Secondary market. Yes.
You're asking why? That's Nigeria, no? That's the Nigerian mentality.
So this is something that mortgage banks can look into. Leverage on other states like Ekiti State, Osun State, several other states, and go into arrangement like this, because such arrangement took care of two things: affordability for supply and also affordability for the mortgages. And that is why a lot of civil servants from Ogun State were able to access mortgages and buy those homes. And it's such a very beautiful estate. All things being equal, you expect that it will be like the upper middle class that will be living in such an environment. But because of that arrangement that Ogun State government did in conjunction with Gateway, and then Gateway got money from us at 8%. So it all made it very affordable. So it's something that every other mortgage bank should copy from.
Brilliant model. Round of applause, please. Sorry, who is shooting this? Can you please remove the logo of Unilag of Lagos, please? Remove the logo of Unilag, please.
Why?
I'm allergic to it.
That means you are not an advocate.
I came from the main investment. So you can put Uber logo there, it's better for me. I'm allergic to this. I'm sorry. And the last question, and it's for everybody. 1 minute each. To answer the first question.
I didn't know.
Yes, Gary, no.
Please, I just need to.
Okay, sir.
Thank you so much. Brilliant contribution from you. And there are 3 things really stand out. Especially from the last case study. We are not a failed state. We have been doing things. All we just need to do is to scale up. It's to scale up. I want us to be sincere with ourselves. I want to be sincere with ourselves. We have gone into a stage in this country where we need to be sincere with ourselves. You see, at my age, I've got to an age whereby I should be able to speak my mind.
1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2.
Hello, please. Listen.
1, 2.
If we leave this place without definite action plan, it's not good. We've had people that succeeded. We have to agree. And I believe that the first point of action is that let us agree. Because you don't change
what you are not comfortable, what you are comfortable with. The first thing is that what is the total portfolio of mortgage in the country today? People are saying between 50,000 and 100,000. And let this meeting ask ourselves, are we happy? No. We say no. Then, how can we? We are not solving the problem overnight. But at the 2025 meeting, we agreed that this 100,000, by the time we meet next year, we want to increase it to, if not 500,000, at least 200,000. Then the question now is that, how do we achieve doubling the existing figure? And then it is then that suggestion and case studies like this becomes handy. That you have achieved this one. It has worked. It has worked. Let us scale it up. The second thing I want to say is that I heard that we have decided to do our best within our means. It does not work. That we don't have control. We must remain the voice of this sector. And that leads me to the story of a man who has 50 acres of land. And he needed 2 grams of grain to plant there. And he went to the grain store and he was asking for 10 grams. And the farmer said, the seller said, you don't need more than 5 grams. He said, of this high, expensive and high yield, he said he wanted to give the 5 grams to the surrounding farmers, the old people around his farm. I said, are you so stupid? This is expensive free of charge. He said, if they plant poor crops and I plant good one, because there is cross-pollination. Cross-pollination does not recognize boundary. He said, I will eventually have poor yield. Let me solve their problem so that I can have high yield. We can't afford to say we are helpless. We must be resolute more than before. Things that affect my business, things that does not allow my business to grow, we must fight it together. And lastly, I want to say that discretion is the foundation of corruption. Any organization that is working on discretion, as you come, as you know person, will go favor you. You ask pertinent question. Why is this opportunity limited to? Since we have designed a template that works for Gateway, let's push that template that it will work for all.
Madam, are you hearing that?
Let's put a template that will work for all. No, it's not that they have tried, they've tested the water and it has succeeded. And we are celebrating them. We applauded them. Let that opportunity go round. Let NRC now see that this is a template that can really penetrate into the informal sector. And lastly, I want to say that if we all agree at this meeting, as he recommended, that mortgage bank should recognize other incomes. If we all agree, it will be part of this meeting that what constitutes other income. We define it and begin to accept it. One thing I know, like he said, that let us push the frontier beyond 60 years. If it will not work, let all of us agree here. What will not make it to work? Let us agree. Not that somebody just present the paper and make the recommendation and we all go. This thing, 60 years, can we push to 70 years? This is the reason why it did not get to 60 years, because actual scientists are saying that it cannot work. But when we look at our area, in Nigeria today, children's income is other income. Because remittance from overseas is the second largest income in Nigeria today. No child will allow his father to be thrown to the seat because he has attained a particular age. And like he said, when we were talking, he said a man muzzled his strength. He was able to approach mortgage bank at the age of 55. That's when he was able to raise his. And because there is a law that says that we only 5 years, you have to fee. How can we factor in other income from the children? These are things we have to do. If we know that our current stock, our mortgage portfolio is 100,000, and we want to penetrate into the informal sector, let us dissect it. That this meeting, we are all going out as an organization that our members, they must be able to do this, they must be able to do this. That's the only way we can grow this sector.
Okay, so Dr.
Thank you so much.
Sorry, let me just. At the issue of what the last one you just mentioned, we don't want to interrupt West. We have already done that in the subsector. We call it generational mortgage.
Okay.
So instead of pushing for ages to be enlarged for everybody, no. So we have said we have recommended it's not generational mortgage. So I can, at 70, call my children, whether 10 or 2 or 3 or whoever, and say we are working together. If I step out, you step in. We have accepted that, and it's part of our standards now. Because we are moving forward.
But we don't know in the university.
No, so like you didn't know what happened in Gateway, and so we are now knowing, and like we have all said, it has to be made available to everyone. Okay, so, Doctor, for you to
Prof, thank you very much. Another thing I want to add is that because we were not here yesterday, some of these issues that have been identified, we have agreed that there is going to be a coordinating working group that is going to identify all these things. They are going to work on it and push it forward. And what we've agreed is that, look, we might not be able to handle everything all, but the low-hanging fruits will be handled, and then just like the ones you mentioned now, everything, just like she said, the one Ogun State did with NMRC, they were able to target institutions. I went to my state and told them certain things they could do about NHS. I had a one-on-one with my late governor, and it was meant to be pro bono. If they were going to walk into that issue, maybe yesterday. And so what I'm saying is a function of the vision of who is the governor. Is he saying it beyond what you are saying? It's not an issue of a transaction. It's an issue of benefit. So that's why that one was able to work. And just like you said, sir, if it worked, then if you can also scale it up. I mean, I think there's a gentleman from, no, not Jigapo, from one northern state yesterday, Adamawa, who said they have about 1,000 units that they are yet to sell. Wow. 1,000, but he said they've been able to sell 500, but they're still. So these are. So thank you very much, Prof.
Round of applause, please. Round of applause. And what Prof was asking for actually, you know, he said it when he was talking. He said the retirement age was 65 before. Then they now increased for professors to 70. So we wanted us to adapt that model into mortgage. Prof, we'll do that after this. We'll do it for you. And the last question, please, 1 more minute, same question. And Mrs. Jumoke Fashanu, you'll be the timekeeper. 1 minute. Because they are all MD CEOs of banks, if they exceed 1 minute, we charge $1,000 per second that they exceed 1 minute.
Payable to the kilos.
Sir?
Payable to the
network, sir. The question goes to the program sheet. This session, this plenary session, is expanding access to affordable mortgage finance. That's this session. So the question is, what are the ways to expand access to affordable mortgage finance using your institution as a case study? So we'll take it one minute. So tell me when I should start. I'm starting with Mawaga. Yes. I was told he's a senior brother to Emmerich. Yeah. Am I correct?
Yeah.
And so let's start from the eldest brother. 1 minute.
Thank you very much. I will try.
Sorry, $1,000 per second after 1 minute.
Absolutely. And that will be shared equally. Okay, on a more serious note, to make affordable houses accessible to people, we've talked about several challenges that makes this challenge makes the cost of delivery to be very high, and so tackling the challenges will definitely make the price to be down. And I can give you some quick examples. I spoke about the issue of tithing. Currently, some state charges high as 10% for perfection. If that can come down significantly, it will make mortgage accessible. Apart from that, issue of land being available, I spoke about the states in some instances providing out land. Of course, we all know what happens in FCT now. If anybody wants to own, it's going to be within the city center. Definitely the person must be a billionaire. There's no doubt about it. And that's why it takes a military man to be protecting the plot.
Off the mic, please.
Okay, I hope the mic. Beyond that as well, yes, I know the president said there are certain things beyond our reach. But of course, I will quickly refer to what Prof said earlier on. The issue of how FMBN got into the supply side of housing. The late Professor Mabugije created the Redan as well as Bompan. The Bompan has to do with the building materials suppliers there. And of course, even if we cannot directly enter and that can actually leverage on and bring down cost of building materials. Beyond that, one critical thing, because as a financial institution, at the end of the day, because of doing my business, my bad loans or my NPL impacts on it. Oh yeah, because the money that goes out that did not come back in definitely will make me to incur some costs, because those funds actually belong to some people, and if they are trapped there in NPL, definitely I'm carrying the cost. So NPL coming down is significant. And what am I trying to say? Character matters. When people borrow, let them pay back. We've seen cases where a whole lot of off-takers or mortgagors or even developers that borrow from institutions, when they do not pay back, it has some significant cost implication on the institution, and by extension it will transfer to the central.
Thank you, sir. Thank you, sir. Thank you. Did he cross 1 minute?
No.
And who said no? Who's asking question? Now, me, they ask question.
Yes, it is. 59 seconds.
No, that's 59 seconds. Over to you, ma'am.
Okay, thank you.
Sorry, ma'am, are you starting with Anna? 1 minute?
Yes, no. Thank you. So I'll keep it at 1 minute. I just want to say that charge the working committee group that will be set up to study the Egypt housing system. So what is happening in Egypt is like what Gateway did is like a very small fraction of what is happening in the country of Egypt. There is like a housing revolution that is happening in Egypt, and what is happening is it's like that template that Egypt is using is what Ogun State used for that Prince Estate. So you can imagine when all states and even the federal government adopts it, because only mortgages or mortgage financing may not solve the issue. So there has to be some effort from providing affordable housing, so that affordable housing plus affordable mortgage financing just makes it work. So it's something that we need to look into. Scale up that Ogun State transaction that has happened. I also want to say that there are several opportunities for green financing, diverse opportunities, particularly in European countries, where you can get.
Mic check 1 2 1 2.
So it's something we need to look into. So that's technical working group.
Mic check 1 2.
Has to identify these institutions where you can tap into cheap funds almost at 0%. And then you can now blend it with funds we can get from the capital market, and we get a lot of cheap funds. Thank you.
You did mention the fact that Ogun State has keyed into the MEL, the Mortgage Movement for Colonial, which is the grand work that makes it possible for it to achieve what it did with NMRC. You know, that's the point we are using. State governments should key into the MEL. That will give them the ambience to have access to affordable financing, and that will make life easier.
The Egyptian model. Madam, are you Egypt?
Okay, sir.
Okay, thank you very much.
1 minute for him.
Okay, I would say, more focus or more innovative solutions around lower cost financing, not necessarily for mortgages, because there's a lot that's been done providing for mortgages now, but for the housing delivery itself, because without the housing supply, the mortgages can't be issued. So, and to be able to achieve that, because what we saw when we were putting them together and approaching investors was the associated risks with providing the funding. That if they provide their funding for these mortgages, the owner's default, the bank's default, what guardrails do you have to address these issues? I think it is still that bit, that exposure to construction risk, procurement issues, FX issues, being able to deliver quality are those things that investors are also seeing that are making them take a back seat, not to want to invest in construction. So I think a lot of efforts in de-risking the construction industry will be very useful to attract more investors to be able to provide concessionary funding in to support developers together as it's been done for mortgages.
Thank you.
I'm glad I'm sitting beside you. So one of the things which I have discussed with them is they should look at increasing the limit, because since every
increasing which limit?
The limits of amount you can access
from 100 million to
from 5 million to, I don't know, something that is enough to accommodate the
really scratching his chair.
Yes, we had that discussion earlier, because truth is the reduction in interest rate, the single digit has stimulated a lot of demand. We've been inundated with requests from the market. A lot of people are interested now in buying houses through mortgage, because single digit that works. I mean, in 2 weeks, in 3 weeks, you can own your own home, and it's just at 9.75%. But the drawback now is that you quickly exceed the limit that MREF has given you, and so you still have a lot of requests. You can't go forward. I told them it's just like you've asked me to fly, but you have clipped my wings. So they should do something about that limit. If they can increase the limit, it helps us to reach more people, and that relates to the housing gap we are talking about. And the other thing is advocacy. So what we can do, what I can do as a bank is also to add my voice to that of the bank. Mr. Motosho mentioned the mortgage foreclosure law. That is a drawback too. So in a situation where you have given out mortgage, you can't recover your money when the person is defaulting. You have to go to court and you are there for 10 years. It makes you more stringent in your conditions. When you are giving conditions to the borrower, you are more stringent because you want to protect yourself. And then again, another advocacy would be, I think Dr. Oyaboye mentioned it, the cost of perfection. You have cases where you have, people have had to report us to MREF when you give them cost of perfection. And they're looking at, they're buying a house of say 150 million, and you have to spend 5 million, 7 million just to register your interest in the land registry. That is prohibitive. Some people turn it down when they see that they have to pay that. So that is something we are going to add our voice to make a case for people. The government should come down on this, and then make the process seamless too and easy.
Thank you very much. Delta.
Thank you very much. I want to align myself with what my colleague just said just now. And in addition to that, based on advocacy, I think since all the stakeholders are here, another thing that is militating against this industry is we should try and look at the criteria for lending, the affordable, the permissible and non-permissible condition as outlined by CBN. Maybe they should touch it a little so that when going into certain transaction, which although are related to mortgage, they will view it as non-permissible. So that should be addressed. Then what we do that makes us tackle this issue of access to mortgage in data is we try as much as possible to enlighten our customer, make sure the turnaround time we keep to it, and also boost their confidence and trust in us. So we do that a lot. So in the long run, we make sure everything looks seamless in such a way that defaulting rate is reduced, and before they come for the loan, they already know what is in for them. Thank you.